Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you this week. Austin Campbell, professor at New York University, founder of Zero Knowledge Consulting, and our favorite curmudgeonly ex-fixed income guy is back to talk to us about stablecoins, the Genius Act, the stablecoin bill in the U.S. Senate. It passed this week. 68 to 30, 18 Democrats voting in favor. It will now move on to the House. It is a big deal for dollar dominance, and stablecoins generally in Austin is deep in it. We'll talk to him at length about what that means. We'll also talk with Austin about the market structure bill, the politics around Trump's family's crypto ventures and how that may affect these legislation. And, of course, we'll talk with our good friend Beimnet Abebe from Galaxy Trading, as always, about markets. Big day today. Fed day. Well, really nothing happened, but I guess it's nothing ever happens market. Fed's held rates the same, but nonetheless, of course, we'll check in with Beimnet about what the rates picture looks like. Before we get to all of that, I need to remind you, please refer to the link to the disclaimer in the podcast notes. Note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
Big day today, Fed day, or was it a big day?
It was a big day.
It was.
Very meaningful. We heard from Powell. There is a reasonable amount of uncertainty in the marketplace around a whole host of issues, ranging from geopolitical issues to tariff and eventual inflation impact issues, uncertainties about, the labor market, how's that doing with the current, in the context of the current immigration policy, there's uncertainty around the fiscal situation. Are we going to pass, this really large spending bill? Is it going to be more tame? And so there's a lot of moving pieces, and, Powell seems to think that, given this level of uncertainty, given the fact that, most folks are anticipating inflation to move higher through the course of the year as a function of the tariffs, he thinks that policy is adequate at the moment.
So no cut, no hike.
No cut, no hike.
An uncertain, thoughtful pause?
An uncertain, thoughtful pause, yes. But we did receive the summary of economic projections today, and it was the back-to-back summary of economic projections that basically hinted at stagflation worries, right? They lowered growth from 1.718 to 1.4 for GDP growth in 2025, but they increased their core PCE estimates up to 3%. And they also increased their unemployment forecast from 4.4 to 4.5.
So unemployment higher in their mind, inflation higher, growth down.
Down, which
is stagflation.
Is stagflationary.
Yeah.
And the question is, what are you meant to do in that environment, right? If you lower interest rates because you're concerned for growth, inflation expectations will probably move higher. And so you're stuck between a weird situation where you just kind of need to see what happens to kind of actually
you
determine
need to break
what
one way or another.
Correct. However, what was interesting though is in that, given those set of expectations, the dot plot still had 2 cuts on average for 2025. And I believe the cuts for 2026 decreased by 1 cut. So high level, I think Powell summed it up really well when he said that none of the board members had material confidence in their dot plot estimates.
So even though the dot plot exists as it does, no one's that firm on it.
No one's
the whole
that
thing
firm.
could change.
The whole thing could change.
Yeah. So nothing ever happens for now.
Potentially. But realistically, it's okay, yeah, the economy's chugging along just fine. Why do you want to cut rates that aggressively? Now, the other interesting wrinkle that's very different than historical kind of Fed policy, and especially in the context of the executive branch, is you're getting a ton of pressure from Trump to cut.
Yeah.
Right. He talked about 200 basis points of cuts today. Right. Not just 100 bips.
Wow.
And to be honest, like, I get it from I want fiscal sustainability and I want to be able to raise a ton of long-term debt after rates have moved lower. And like, arithmetically, that does make sense.
Yeah.
But in terms of like the consequences of that and the unintended consequences of cutting too soon and too aggressively could be catastrophic.
Right.
Potentially, right? In terms of unanchored inflation expectations.
Right.
And then having to reverse course super quickly and losing credibility at the Fed. And so, again, stuck between a rock and a hard place with a ton of unknowns.
All right. So, we've been unknown for a while, too. You've been covering this quite well because this is what you've been saying now for several weeks about this, right? Unemployment, sketchy. Growth, sketchy. Markets are still, I guess, are down a little bit now with the crisis happening in the Middle East.
We are 1 day away from all-time highs.
Yeah,
one good day,
day
in the equity market, and you are at all-time highs. Forward valuations or estimates, essentially forward PEs are back to the highs.
Yeah,
right. You're talking about a 22 forward PE on the S&P. That's where we were in January, right? And so there is a lot of optimism priced into the market. A lot of that optimism has been driven by AI and the continued growth in terms of expectations, in terms of the net impact on companies. Oracle reported really strong earnings last week. That's been a name that's been doing well. Microsoft obviously has been doing fantastic. And there are other pockets like AI healthcare related names and things like that. But long story short, people want to invest in the AI theme, and that is buoying the market to a material degree.
Yeah.
And if you think about the geopolitical stuff, a resolution of the geopolitical stuff is incredibly bullish.
If it does happen.
Whether it's we've destroyed all of Iran's nuclear capabilities, so they no longer have them. That's a positive ultimately.
Yeah.
Question is, will that lead to more unrest in the region, higher oil prices, blah blah blah? But I think generally it'll be a pretty good outcome,
at least for the near to medium term following such an outcome. I would agree with that.
Right. And so you've got
or if it's a negotiated settlement that halts the conflict. Would also
Correct.
You were going to say either, right?
I mean, either.
Yeah, resolution.
Either form of resolution, I think, is
because right now they have us kind of on pins and needles here. You got the Ayatollah saying a surprise for the ages. Get headline after headline about Trump, either getting involved or doing more. Or
but I think you're the main chunk of the distribution of outcomes with respect to this conflict is generally positive. Now, that doesn't necessarily mean that the left tail associated with this geopolitical risk isn't necessarily that big. Right. I think people are underpricing that kind of left tail outcome where this becomes more prolonged,
spirals.
And that's a real risk. But the bulk of the distribution, I think, is generally positive for markets. And so, with that in mind, crypto, has retraced from the highs. Bitcoin's off 5% from where it was, call it late last week.
Yeah.
And you've seen a material decline in alts.
Yep.
But there are some very strong pockets of strength. And some of it is associated with optimism around the Genius Bill, and kind of optimism about, where DeFi is headed and stablecoins are headed. And those are the parts of the market that I think are most relevant to investors. And you see that in DeFi names, and they strongly outperformed your L1s and BTC to a certain extent over the past month. And I think that if you're going to a world where tokenized equities are a thing, where DeFi platforms have a clear pathway to engaging with users, there's an institutional pathway for DeFi protocols, there is more active usage of stablecoins, and therefore stablecoin dexes and things like that. You're talking about DeFi TVL that's probably going to move up in huge orders of magnitude.
Yeah.
And if that's the case, that's truly the bull case for a lot of DeFi.
It's interesting. Yeah, I agree. And also, even with the outside of that pocket of strength that you're talking about, like, still feels pretty resilient up here. I think.
Yeah.
Remember, there was the time last year when Iran sent a wave of drones at Israel on a Saturday night, and Bitcoin tanked from like mid 60s to like 48. I think the rest of the market opened flat on like nothing ever happens capital on Monday morning. But it's some weakness in general, but not. I mean,
Not a whole lot.
Feels like if this resolves, we can resume our prior
trend
activities.
Yeah, no, absolutely. And I gotta say that there's tremendous capital flowing into treasury companies right now, and a lot of interest in treasury company plays, and that's genuine buy pressure.
Yeah.
And so there's never been a stronger link between traditional capital markets and BTC,
Right.
and the rest of crypto, to be honest with you. And so, as more capital is formed, like more capital finds its way into crypto, and that, makes me incredibly bullish over the long run.
Beimnet Abebe from Galaxy Trading, as always, thank you so much.
Thanks for having me.
Let's go now to our guest, Austin Campbell, professor at NYU, founder of Zero Knowledge Consulting, a resident stablecoin expert. I think you know an unhealthy amount about stablecoins, and curmudgeonly former fixed income trader. Austin, welcome back to Galaxy Brains.
Thank you very much. As we've discussed, I will be here once a year when stablecoins become relevant.
Well, they are relevant now. I was at the Coinbase State of Crypto conference last week, and I was joking that it was like stablecoin. And then Brian and Jeremy saying that they wanted to revolutionize the global financial system, but compliantly. And I was like, it is the age of compliant revolution, it feels like, in crypto.
I was going to say the great irony for the entire crypto space is the blockchain, not crypto people were correct.
Yeah, they kind of, well, now digital assets. It was like they should have said digital assets back in 2016.
We've cycled through so many things, Web3, like you name it. We just keep putting new coats of paint on the same building.
It really is true. You do hope one day, we find out how to build a new building here. There are some new buildings, though, that people are using and entering, not to overextend the metaphor, but stablecoins are one of them, and it is that time of year, Austin, to talk to you about stablecoins. Last night, on June 17th, the Senate finally passed, after what felt like dozens of votes, that's just how the Senate works, passed the Genius Act, which is a formal stablecoin regulatory overhaul framework creation bill, 68-30, with 18 Democrats voting along with most Republicans. So now it'll go to the House. Maybe at the top, what is the Genius Act in your mind, and what does it mean for stablecoins?
Yeah, so in my mind, the Genius Act is actually in many ways surprisingly boring, and I think that's a good thing. And what I mean by that is in the United States, if you zoom out a little bit, from 2008 onwards, we've been slowly but surely marching through financial products that exist and saying, we should clean this up, we should clean this up, we should clean this up. And one of the efforts, like for as much as people have had negative things to say about U.S. regulators that I would say they got right, was fixing cash stability products. So in 2008, I will remind everybody the reserve fund, which was a prime money market fund, broke the buck. Asset-backed commercial paper that everybody thought was stable and would trade at par completely blew up. And many other things in the cash stability space were falling apart. They did a big reform effort on the back of that, the Federal Reserve, specifically Bank of Boston, and many of the other regulators to reform U.S. cash products. That framework, which basically said, listen, insured bank deposits, you're cool. Government money market funds, you're cool. Everybody else, strings attached. And the strings vary from like stable value wraps, where there's a little, all the way to like prime money market funds, where it's like, no, you're gating and floating NAV. Okay. The point is they did a good job there. Stuff has worked. Zero government money market funds have collapsed. All right. And in 2018, the New York Department of Financial Services, when they were confronted with stablecoins for the first time, looked at these things and said, oh God, what would work? And basically said, we're going to steal the homework of the Fed and say they need to be government money market funds. Well, now here we are all the way to Genius. And what has Genius done? They've stolen the homework of the NYDFS, who stole the homework of the Fed. So we have round-tripped ourselves back to fixing 2008 problems and basically said, here's what a stablecoin is. You take T-bills or overnight lending agreements collateralized by treasuries or bank deposits. You lock them in a safe box. You can't do anything funny with the money, and that's your stablecoin. And I'm basically done talking.
Yep, and that's okay. And so this bill does that. It creates, and it has a bunch of other, all the stuff that comes along with that, right? Consumer protections. I think one of the ones they had was bankruptcy remoteness.
Yes.
For the token holders. I've seen a bunch, but let's get into the critics in a few minutes because, one of the crazy, I've seen people say, oh my God, this puts stablecoin token holders ahead of bank depositors. Not true. We'll talk about that. But one of the other interesting ones, this was politically seen as easier than market structure, which is the Clarity Act in the House. That's probably still true. And so it went first in some ways. And but it had some hiccups. It looked like it was going to get its cloture vote. Then Senator Gallego wrote a letter saying we still have big concerns. And then it failed that cloture vote. And then there have been several backs and forth. One of the interesting ones I wanted to point out that was added as part of the negotiation to resolve Gallego et al.'s concerns was the ban on publicly traded non-financial services companies issuing stablecoins. What do you make of that? And what is that?
Yeah, so that is a very sort of classic antitrust concern if we think about what's going on here. And I think that simultaneously bubbled up on the left and the right in an unexpected way, because it would create a very unlevel playing field the way the bill had originally been constructed. And I will say this, I think there were many objections raised by some of the, call it hysterically anti-crypto people in bad faith. I think this was a good faith objection. And basically what it says is, if you're not primarily a financial services company, so by that, it's a pretty broad thing. That could be banks, asset managers, payments companies. They're fine. They do financial services. But like things that are not financial services companies, Amazon, Netflix, Google,
Right.
Meta, should not be launching a stablecoin without extraordinary, essentially, permission from the Treasury and others.
Yeah.
And what that is basically, we don't want you bootstrapping a financial monopoly from a tech monopoly, and so we also don't want you bootstrapping a tech monopoly from a financial monopoly.
Right.
Now, this bill closes the second loophole. That first loophole was closed by the Bank Holding Company Act. So I think a lot of the lobbying from the left was from an antitrust basis, but some of the unexpected ones from the right was the big banks being like, wait, hold on, if Meta can do banking, why can't JP Morgan launch a search engine?
Right.
Right, and you know what? That's actually
a reasonable
logically
question.
consistent in a certain way. So now there's the provision in there, and I want to remind people this doesn't just apply to public companies in the United States. It also captures many foreign companies and private companies.
That's right.
So I don't think TikTok is going to be launching a stablecoin. I don't think Alibaba is going to be launching a stablecoin. I don't think what's a good example of a large private company in the United States that like Apollo,
Right.
could have one of their subsidiaries launch a stablecoin trivially, right? Like maybe the right ones. And so the point is, we're trying to create a level playing field where financial companies do stablecoins and non-financial companies do non-financial things. And by the way, to their credit, once that was passed, as you said, many of the younger Democrats, and that's an interesting dividing
Yeah.
line, voted here. Because if you look at the ideology on the Democratic side that separated this in the original vote to bring it to the floor, I think it was that the average age of people voting against was a little more than 68, where the average age of people voting for was 56.
Yeah.
It's a generational thing.
It really is. And, I think you make a fascinating point pointing out like banks doing tech and tech doing banking. But how much of this was also just like brain damage from Libra, right? Because you mentioned Meta. It does seem like this has been a specific concern, by the way, both on left and right, after Cambridge Analytica and bias in social media and the, COVID social media stuff. Both folks, talk about Senator Hawley on the right, Warren and many others on the left that didn't want Libra. Is that part of this?
It's certainly part of it, but I think it's a little bit bigger than just that. Libra definitely concerned both banks. Again, back to the, hey, if Facebook can do a stablecoin, we should be able to do social media. And also people in the privacy, the antitrust, the consumer protection space. I totally get that after Cambridge Analytica, but keep in mind there were also rumors, let's leave Facebook aside, of like, Walmart launching a stable coin,
Yes.
or maybe Amazon.
Right.
And I think they were also saying, we don't want this extractive behavior of saying, well, to buy anything from Walmart, now you're using the Walmart stablecoin, right? The bundling. Because if you look at, even if you can get extraordinary permission, which I think is going to be a bar maybe too high for anybody,
Yeah.
one of the things that's in there is anti-tying provisions.
So you can't do layer it all in as one big bundle. The Wall Street Journal did run a story last week, or maybe even Monday, if I recall, this week, saying that Walmart and Amazon were the headline was, are exploring issuing their own stablecoins. Now, I was criticizing this story specifically, and by the way, the concept. But I want to ask you about the concept again, even more detail. But I was criticizing the story because the Wall Street Journal failed to note that there was a major vote happening in the Senate about stablecoins, of which this exact question was a major negotiating point. Which, by the way, Walmart and Amazon are not, right. They are not primarily financial services companies. They should be explicitly banned here, should they not?
Correct. And so I don't have a problem with the journal reporting that they're exploring. They totally might be exploring it. Like, for all anybody
They
knows.
should have noted,
yeah,
though,
I
that
could
there's
be-
a major
yeah,
bill that
I could
would
be exploring becoming king of America.
right.
That doesn't
You're
mean
exploring
it's
it.
Yeah, that doesn't mean it's going to happen.
Right.
And so it's exactly as you said, they were remiss not to mention that the Genius Act, should it pass, appears to ban explicitly the thing that we're discussing right now
Right.
that they are exploring.
And
That is
Visa
the
and
journalistic
MasterCard and other payment stocks traded down huge on that story.
Which I don't get it. I think there's a big misunderstanding about this in general. I mean, right now, you can look at Circle trading at something like 2,000 times price to earnings in the market. I would suggest to people, as a general statement, this is true zooming out even from stablecoins. Financial markets transformation takes longer than people think. It's harder than people think, and the results are less predictable than people think. So I think what you're seeing here is all of this money sloshing around in public markets, desperately trying to find a theme to invest in without really having the proper way to do it or understanding what's going on. Like, I will remind everybody, JP Morgan just announced they're going to put a deposit token on Base. And if you think Circle is worth that much money on the back of having a stable coin, why is JPM not up even more, quite
Right.
frankly, given their platform? It's like with all things tech, it's very confused at the starting line.
Yes. I want to ask you about the JPMD. So they had filed a patent, I guess, last week, and it said JPMD, and it had a whole bunch of stuff. I mean, I figured that a lot of people speculated that it was a stablecoin, rightly, that was a ticker. I looked at it at the time and said, I think this might just be JPM Digital, like that they're going to launch a bunch of stuff. That's what the patent said. But yes, Bloomberg did report also this week that they're going to tokenize deposits on Base, which is Coinbase's L2, for their clients. But let's talk about tokenized deposits. Our mutual friend Omid Malekhan has criticized this for a long time. I tend to be in agreement with him. Is there today a secondary market for deposits? Isn't that just you sending me money from your bank? Like, right? Like, what does this really mean? Wouldn't everybody have to be permissioned and have an account at JPM?
I mean, I guess the question becomes, what do we mean by secondary market for deposits? I will jokingly say, yeah, it's called CDS.
Yeah.
Which, might actually dismay a lot of bankers. No, there's not really a secondary market.
Like, you can't trade deposits.
And only in
Send them.
very limited ways in
Some
terms
strange-
of bankruptcy claims or
Right.
things like that.
Right.
So, it's hard. The other point I would make that is very important here is deposits are not fungible. And if you don't believe me, imagine in 2023 somebody telling you, I will trade you as many Silicon Valley Bank deposits as you want for JP Morgan deposits at 1-to-1. Definitely not fungible. So all bank balance sheets are different. Deposits are not fungible. Tokenizing deposits, there's nothing fundamentally wrong with using ledger technology. Like, knock yourselves out. One of my big criticisms of all of the rhetoric here has been like, guys, we way over focus on the ledger because, like, here's a heuristic that I give people as a professor. Whenever anybody says blockchain, replace that in your head with Microsoft Excel and see if what they said still makes sense.
Yeah.
Right? Because it's just a ledger. And so, I mean, fine, tokenized deposits, go for it, guys. Like, to me, the question is there demand for JP Morgan deposits to be used in this way, which do not work exactly the same as a bankruptcy remote stablecoin? And my answer is maybe let them experiment.
Yeah. Don't you think that the Genius Act prohibits passing of yield to token holders? of the stable coins. But a deposit can pay interest, right? Could that challenge the? Now, most of them don't, to be clear, right? Because that's like the cheapest funding source a bank could ever get is a deposit. But they could, and they could pay it wouldn't 0.1% possibly to some people make that more attractive than a Genius Act stablecoin?
All right, I'm going to say some provocative things here. One, I'm not certain they can because one of the permissible assets for a stable coin is a bank deposit, and there may be an argument that if you put any deposits on chain, you've created a stable coin.
Right.
So let us first say there's a lot left to be written on how that's going to work. My answer there is maybe.
Yeah.
Number two, I don't think that yield prohibition works the way people think. Like yield and interest have specific meanings. It would be very hard to stop commercial companies from just paying marketing rewards. Unless you wanted to ban those writ large, at which point, wow, do we have bigger discussions to have about the financial market space in general. Like, remember that get $300 for signing up for a bank account?
Yeah.
Okay, I have questions. So I don't think that prohibition is going to be nearly as, call it prohibitive as people thought.
Right.
And I will also say, I think that's a good thing. I think the banks would have found, had that prohibition been ironclad, that ironically it created a big problem for U.S. banks because what's going to happen is non-U.S. stable coins can be yield bearing and the U.S. version can't, which means all the bank deposits are going to leave here and go out. Okay, so mechanically, I don't think that's as big of a deal as people think. There will be ways around it.
So, for example, putting your USDC in Coinbase and having Coinbase pay you for it being there.
Correct.
You think that's still going to be allowed under this bill?
I mean, it's hard for me to see how it's not, so long as the way they're paying people is not. We specifically give you the interest off the reserves, right?
But it is from that, right?
But money is fungible,
Right.
right? Like, and this becomes the problem. Like, if Circle makes money off of that and you tell them at no point can that money leave Circle, then like what?
Yeah.
Right? Like, let me say something very weird. Jeremy Allaire probably owns some USDC. Are you now telling me you can't pay Jeremy Allaire anything as Circle if he owns USDC? Because that's like interest from the reserve.
But there's
like,
going to be the OCC and Treasury will be looking at this, and they're not going to prohibit Circle from paying Jeremy a salary. It's like if it walks like a duck and it quacks like a duck, I think in their mind. The whole point, right?
wherever the dividing line is, somebody will find a way to arbitrage.
Yes,
it,
I
is
think
my
that's
point.
right. But let's step back actually on yield. And why does the bill ban yield, attempt to ban yield? It is, in my mind, I thought it was pretty expansive language. It was yield, it was coupons, discounts, incentives, any consideration. They're trying to be pretty broad. It seemed like they're trying to ban Coinbase from paying yield.
Well, no,
Not just
so-
the token holders,
so
not
here-
just directly to token holders.
Yeah, here's the problem.
Yeah, but why is that?
Okay.
Why do they want to do that?
One, let's be totally honest, special pleading by the banking industry. The banks don't want the competition.
Yep.
There's no good economic argument that we should create financial products and the primary beneficiaries of those financial products
Or the
should only
issuer.
ever be shareholders and their executives.
Yeah.
Because I want to be clear, what they voted in that bill is to make Jeremy and Paolo as rich as humanly possible. I'm just going to let that sit for a minute. Like, that's what they did. And the reality of having done that is, one, I think there will be commercial pressure, especially on the OCC, to realize that was an oopsie and not get too stringent with the prohibition. Because if you say, no, we really did, as like Democrats and Republicans, and giant bonuses to Jeremy Allaire was the game plan here, you're going to have a very big problem across the entire industry. All of the banks will transition their entire balance sheet into stable coins to pay their executives and shareholders as much as humanly possible and box out consumers. Oops. Two, Coinbase is not the issuer of USDC. I don't see how you're going to effectively put these restrictions on third parties. And so then what you're having to say is, I have to ban the payment of marketing incentives to distribution partners, which is back to my all money is fungible.
Right.
All you really need to do to evade this restriction in the current bill is put an intermediary in the middle.
Just like buy a car and sell it. Not even a car. Buy a stock and sell it, and then take those and
Correct. And so this is going to create this problem of like, okay, the money has to go somewhere. Like, it's like a balloon. You squeeze it somewhere, it comes out somewhere else. And people are going to find a way to compete with that and deliver value to the consumer, which, by the way, is how a market should work. I'm saying I functionally don't think there's a way they can prohibit yield on these things that doesn't end up actually being catastrophic.
But wasn't part of the fear, not just from the banks, but even from the money market funds themselves, that if the money market funds are all paying 4+% right now annualized, but you can get that same 4+% by parking your cash at Coinbase. Then you might see a flow not just from an onshore to offshore or from the banks into stables, but from the money market fund deposits into stables, which, by the way, are basically like money market funds
I
with
was going
wings.
to say, which, by the way, go right back into money. Like, let's take Circle as an example because this is amazing. Let's say that happens. Somebody has a money market fund, they sell it. They buy USDC on Coinbase. That money goes to Coinbase, which goes to Circle, which goes to BlackRock's money market fund. All we've done is round trip to money.
Yeah.
Like, it's money market funds all the way down.
Okay, so not a big fear then, you don't think of that?
I mean, this is, again, a confusion of what's really going on here. At some point, the stable coins got to buy T-bills and do overnight reverse repo, which means it's doing that somewhere, which are money market instruments.
Right.
Like, it's money markets all the way down. The money doesn't magically vanish just because you don't give it to a user.
Yep, that makes sense. All right, let's talk about some of the critics that we've heard. We heard, I don't want to name any of these people, but some former Gensler officials have been very loud about this. One thing that they talk a lot about is that this is a crypto bill. I'll say Elizabeth Warren, she's an elected official. She gave a speech railing on the Genius Act on the Senate floor, several actually, over the last 2 months while it's been under debate. And now she said, now is not the time for a crypto bill. And and she said many other things too, which we'll talk about a couple more. But I look at this bill and I don't see that it is a crypto bill at all. As far as I know, couldn't you, Austin, as a crypto entrepreneur, go and launch a stablecoin tomorrow with mostly no rules? I mean, sure, some TFI, FinCEN, OFAC stuff you got to do, but like other than that, like any kind of, you could have apples, right? I mean, there's no comprehensive framework. So crypto firms can already do it today. Anyone can, quote unquote, do it today. Banks cannot, right? How do you see it? Is it a crypto bill? Is that a valid criticism?
Well, okay, so Senator Warren in particular, I think she's being honest when she says now is not the time to pass a crypto bill because she's never thought it was the time to pass a crypto bill and never will.
Yeah.
So like she's telling the truth, but you got to zoom out a little and be like, well, how about 2021? No. 22? No. 23? No. 24? All the way to 10,000 years from now, the answer will still be no.
Yeah.
So one, I'm not sure how much stock I put into her in particular. Two, exactly as you said, and like I was asked about this by Punchbowl, and I told them this is more like some of the legislation we've had in the past standardizing rules. Because right now I will remind people that I can launch stablecoins in many offshore jurisdictions. Bermuda has a framework. The UAE has a framework. Singapore's had a framework. Hong Kong has a framework. Japan has a framework, right? Like there are many options for launching a stablecoin. So one, the U.S. saying no does not make them go away. It just makes them go away here. Two, in the U.S., exactly as you said, we already have stablecoin issuers. Circle has been around since 2018. They're using money transmission licenses. The NYDFS has been regulating stablecoins since 2018. We've had USDP, GUSD, BUSD, PayPal's US dollar, USDG, ZUSD. Like there's so many of them actually. And interestingly, what this bill does is two things. I think you missed one. One is it levels the playing field, which I think is good. Now banks can do it. And we don't have this state-by-state island hopping problem because you can get a federal charter, which is very nice for standardization reasons. Right. That's good. But two, this bill also said, well, not all stable coins are created equal. We look at things like UST. That was a disaster. We look at what happened with Circle with the SVB fiasco. We don't love how that looked. Let's take the framework that's had no peg stability problems from 2018 to present that's based on money market reform and say, actually, everybody do that. So I would say, here's my counter to Senator Warren. It cannot be the case that Congress looks at an emerging technology with financial uses and says, you know what? Let's prevent regulators from making that safer for consumers. What we should do is hamstring them so that it actually is the Wild West. Like all of their arguments about this is the Wild West are, yes, because you didn't regulate it. Like you were the one who was derelict in your responsibilities by not doing it. It's a little bit like not posting a speed limit, not painting any lines on the road, and then being like, I don't understand why there's so many traffic accidents here.
Yeah, it is. And it forced people and incentivized people to go offshore to dangerous jurisdictions, not just in this space, but with crypto exchanges as well. If you think about FTX is a great example, right?
I would say FTX was not entirely, but a material contributor to FTX was the actions of the SEC under the Biden administration and the inaction of Congress on stablecoins has made Tether the biggest beneficiary of that.
Yeah. If we think about market structure now, this next sort of bill that people are working on, right, which is these were the two things that the crypto industry wanted: make stablecoins legal and safe, and delineate finally, for once in statute, what is and isn't a commodity and a security, and who regulates what. And by the way, also, how do you launch a token and sell it to the public without breaking the law? Blah, blah, blah. That's market structure. You have this new bill here in Congress, sort of a successor to Fit 21 from the 118th Congress, the Clarity Act. It's the Congress legislative achieving something or other. I've already forgotten. Something innovation, regulatory innovation in the 21st century, something like that. It's similar. This is a complicated bill. Stablecoins are carved out of it on purpose. The SEC and CFTC do not regulate stablecoins in that bill. They also don't in Genius. It's banking sort of versus markets. What do you think the prospects of that are? And then I want to ask you about Democrats' objections to the bill.
So, pun intended, the prospects are not clear. I would tell you, I think you summed it up well when you said market structure is very complicated. And I will rewind to, I've been objecting pretty strenuously for years to the approach of the SEC on the basis of you were over fixating on the ledger technology, right? Like when at the time, Chair Gensler couldn't tell Richie Torres with a straight face whether a tokenized Pokemon card was a security or not, you knew you had a problem because the answer is transparently, it's not a security. Again, substitute in your head Microsoft Excel. If I move it from a paper list to Microsoft Excel, I cannot transform an asset into a security. Well, I would tell you the Clarity Bill kind of has the same problem in reverse, which is they are also probably over fixating on ledger technology because without getting into gory details, I've read the Clarity Act, and I think the people who should be most excited about that are hedge funds and large banks because there are many forms of complex structured products that they cannot currently sell to retail, that if you were to completely automate those products off of automated triggers, parametric things, and all of that, and had no discretion whatsoever, and maybe farmed those functions out to people in a way that was, let's use a buzzword, decentralized, I don't know. It might not be ideal if Goldman Sachs could dump an infinite amount of interest rate vol on retail through this bill. And so that complexity comes about because, again, you're kind of starting with the ledger part of it as opposed to the economic substance of what these tokens might be able to be. And so I would tell them, I think there are a lot of good concepts in the Clarity Bill, but a little bit like stablecoins a couple of Congresses ago, I'm not sure it's ready for prime time yet. Mm-hmm. And if you wanted to be simplistic about these things, there's some very basic housekeeping stuff that you could get done, which is like maybe exchanges shouldn't also be custodians within the same legal entity. And maybe you could just pass a rule that the, call it characterization of an asset may not differ because it's on a different ledger.
Yeah.
And those would fix 80% of the problems you're getting to and leave the 20% of hard things to fight about later.
Yeah, it is. The thing I like about it, your point about over-indexing for the ledger is quite interesting. I can see I'm struggling. Maybe I'm living in that myopic world where I'm struggling to actually think about this as not blockchain stuff. But one of the things I do like about the bill overall, although I'd say I'm ambivalent to the actual form that these substantively have taken, but are the factors that make something sufficiently decentralized. So it was like, the issuer can't totally control the validator network. They can't own more than, in this bill, Clarity, 20% issuer or its affiliates of the tokens. That's always been, like, what is the threshold? Like, what is the legal standard for that buzzword decentralization? I don't know if these are right, like, exactly. Like, is it 20%? Is it 10%? Is it 50%? I don't know. But I admire them trying. Because the thing that makes me so mad about the Biden administration on this space was that you've got case law, you've got Howey, you've got Reeves, these securities rulings at the Supreme Court that is how the SEC looks at whether or not something is a security. And you can literally have, within the span of 4 months, Chair Gary Gensler say most tokens are securities, and then Chair Atkins say most tokens are not securities. Two, the same regulator, 4 months apart, coming to opposite conclusions based on the law. So, like, something has to be fixed on this, in my opinion.
One, I agree completely with that. And by the way, I do think it's in the process of being fixed, which is to say, I think both Congress might get something lighter through and whether regulators like it or not. The courts have been in the process of fixing these things. And I think, to their credit, judges are willing to say this is a complicated product and a complicated problem, but at the same time call out the actions of the SEC. Like, if you really want to get into egregious stuff, it's not just Chair Gensler and then Chair Atkins saying that. It's that I will remind everybody that under Biden, the SEC was sanctioned and had to shut down their Salt Lake City office for lying in court about material details in a case called Debt Box.
Yeah.
Okay, so now we've gone way beyond legal interpretation to actually the enforcement officials are themselves the criminals. And two, in different courts, so like say in DC versus New York versus California, they were arguing totally different theories of why tokens might be securities. That's not kosher.
Yeah.
Like at some point that would get to SCOTUS if they want to continue on that path. And I don't think it ends well for them given how things have gone with Chevron to have an agency come up and say, well, so yeah, we may have argued three totally different, sometimes mutually exclusive things to try to no. So I think this is a conduct issue, exactly as you've said. I don't think, personal opinion, I don't think the law is as unclear as Chair Gensler would have liked to have believed. I think they were grasping at straws to try to find jurisdiction in things they know they didn't have jurisdiction for. If you contrast the behavior of the SEC with the CFTC, I think the CFTC, while I don't agree with everything they've done, has been more measured in this space and not creating huge amounts of internal contradictions left and right to the point that nobody would even talk to them. So to me, I would suggest if we're going to go down that path, this is more an oversight and investigations problem that should be happening at the SEC.
Yeah, interesting. And they are doing their own rulemaking. It looks like they're about to, and their own scoping out. To me, it's more like you want the market structure bill because you don't want an AOC Warren presidency in 2028 to roll the whole thing back at the SEC, right? Like you want, it gives you, in federal statute is more durable than rulemaking, but that's pretty much the only reason, I think, because you look at most of what the bill has, and it's stuff the SEC can kind of just do by rulemaking today, most of it, right? Or by scoping it out of their jurisdiction.
Yeah, and I would specifically say I think the most valuable parts of market structure from a long-term durability standpoint are the points I made about when you have centralized entities mapping them correctly, like with no criticism intended at Coinbase because what they're doing is totally legal. I personally don't think it's good for them to be custodian and exchange at the same time. That's how you have FTX happen. And again, not an accusation. I want to be very clear. But
in traditional finance, you don't have that.
Correct. That structure is a problem over time in traditional finance. So we've learned that lesson. Just follow it. A little bit like stablecoins said, these should look like government money market funds. Like we know how that works. Do the easy part. And two, back to the economic substance being the driving factor. Like again, it's sort of where market structure, I think, is very much fixating on tokens that drive a network. Like I have launched a blockchain, but that you can then tokenize many things on a blockchain. And so, or again, with how lawyers and derivatives traders look at rules, if you write rules a certain way, I will like try to creatively put whatever I can into the box that you have like drawn for me. And so you need to be way more careful with that than rules about consistency of construction, for instance.
What do you think now? Back to Genius for a second here. I wanted to ask you. We got the 10-year stubbornly high. At the beginning of the presidency, Scott Besson and President Trump said they were going to get the 10-year down. That was sort of like their marker. And it briefly did fall below 4 in like January, February, but it's now stubbornly in like the mid 4.5 range. The world does not seem to want our debt the way it once did. Why is that? And do you think stablecoins under the Genius Act can meaningfully be a big debt buyer the way the Treasury says they will?
So one,
Those are big questions.
Yeah, I would like to point out that at the time that the 10-year was falling, Doge was going on and Trump was credibly saying that he wanted to cut spending. And I will tell everybody involved with the government, if you want to bring the 10-year down, it is trivial to bring the 10-year down. Cut spending. Right? Global macro people are not stupid, maybe with the exception of me, but I'm no longer in the space. But most global macro people are not stupid. And what's happening is they're rationally looking at the United States being like, those guys are spending like 6 to 8% per year, like more than they're taking in. That's a big number. And like, let me project that forward 20 years. And that's a really big number. And so, like, they're not fools. They know debt is a compounding problem. At some point, you're going to have a 200% debt to GDP. And so nobody wants to be left holding the bag when you think of that in very, like, smooth brain, simplistic terms as prepaid inflation. That's why interest rates are going this way. This behavior, by the way, is very common in emerging markets. People who tend to spend their ways out of problems with bad governance or default on their debt repeatedly will cut like various initiatives or like things that were supposed to fix the budget. And even if they're doing well in the short term, you'll see the long end of curves go up. This is a common thing. It's happened all over the place. And so the US is trading now like an EM credit. And what that says is people just think we're spending way too much money. So to the second part of your question, can stablecoins help? Transparently, yes. They cannot solve the problem. There will not be enough buyers of debt for the United States to run an 8% debt to GDP deficit for 100 years. Like, you have a math problem there. But what they can do is extend the runway for us to deal with this problem. Finding more buyers of debt, even if they're short-term buyers, allow us to finance more cheaply. And while the US dollar has problems, it's still maybe better than many of the other options. And so we can extend the runway. But this is something, for instance, Paul Ryan talked about a lot, and he got voted out of office for it, which is ominous. But he was saying we need to bend this curve back down in terms of spending. The answer is still the same. We can lengthen the runway to bend the curve, but at some point we have to spend less.
Yeah, we have to actually bend that curve.
Yes.
All right, I'm jumping around here a little, and I apologize for that. But I wanted to, before I didn't want to forget to ask you about the Democrats' opposition and to the crypto bill, and we talked about the market structure. It's a complicated bill, right? And in general, it has its own problems on its, on its face, that it's so complicated and sweeping, and there's probably controversy around many of its issues. But one thing that the Democrats have really been harping on is what they call the Trump family's crypto corruption. And there's been some talk that the bill will not get any Democrats or many Democrats in the House, the market structure bill, if a provision is not added to somehow, rein in the Trump family's crypto ventures. Do you think that will happen? Or explain to me the dynamic, because if it doesn't happen, the Republicans still control the House. They could theoretically pass it. Like, how much does that criticism, attack from the Democrats on the Republicans' bill delay, encumber, block the bill in your mind?
Yeah, without endorsing or non-endorsing any of these views, but just trying to factually describe what's going on. The Democratic objection is essentially that they believe Trump is evading the emoluments clause, which is to say you should not be enriching yourself with public office, especially as the president, by having his family members launch all these crypto things using his name as the brand. Okay,
Yeah.
so they're saying this is evasion. Normally, by the way, for people who don't know, when you're in federal office, there are a lot of ethics rules that attach about like putting things into blind trusts if you have operating businesses, or like if you're at regulators selling certain kinds of assets. This is not a new concept, is my point.
Right.
And you can argue about implementation, and you can argue about whether Congress should be able to trade stocks or not. Maybe not. But like, this is a real principle. And so the objection of the Democrats, if you look at the legislation they've proposed about it, is they're saying specifically, actually, not just the president, but members of the House and the Senate and certain other federal people should not be controlling crypto projects while they're in office. We regard that as a business. And their family members should not be doing so. And I will point out, for completeness sake, my personal view is that there's a constitutional deficiency with that as written. Because, like, let's say that I run for Congress, right, and I get elected, and I have a twin brother who hates me and doesn't speak to me, and we haven't even been in the same room for 20 years. Banning him from engaging in a bunch of activities is patently, like, not
Right,
gonna
he's his
fly.
own citizen. Like,
Correct.
Yeah.
But there is some concept of, well, acting in concert would not be okay. Like, again, using this as a fig leaf for me to evade things and then me just taking full control of this business
Later.
after on. That's
Yeah.
the thing that should be banned. So I think there's a way to make the related persons work, maybe not the current language, just to say that. Okay. So that's what they're looking at. And what the Democrats are saying is that as we look at what Trump has been doing since he's been in office, right before he became president, but after he had won the election, there was the Trump meme coin. And now there's this World Liberty Financial thing, and there's USD1. Maybe the president shouldn't be enriching himself with these sorts of things, and we don't really buy that it's, his family and he has no involvement. Like that, again, that is the argument they are making. I suspect that will probably stick purely because an amendment that is very neutral about who it applies to in the long run being appended to this bill as a requirement for moving it forward because they are specifically angry with a political opponent is the kind of thing that tends to work, just politically speaking, in the US, and rightfully would be attached to the market structure bill because that gets to 90% of what the Trump family is doing. Stablecoins was a very odd vehicle. Like the idea that, hey, we're going to regulate things to bring them onshore and have more transparency facilitates corruption.
That somehow that helps the Trumps? No.
Yeah, no, that's very, I mean, if you believe that, you should then tear up the BSA to fight crime. Like, it's a very confusing argument. But the argument is actually very linear and well constructed as you apply it to the market structure bill, which is why I think it's more likely to stick there.
Interesting. And do you think if it sticks in the House, you get Democrats on it in general? I mean, Fit 21, I forget, but it had, 17 or more. I can't remember. More 70 Democrats? Was it 70, actually?
Yeah, it was
70
a pretty
Democrats
high number
in the House last year. So maybe you get to a similarly bipartisan number, but then it gets to the Senate.
Well, one, I don't think you do in the House without the anti-corruption.
No, that's what I mean. Let's
because
say they put it on and you get that anti-corruption thing. And so that's what gets it. I think without that, what you're saying is this is a Republican-only bill.
Yes.
And maybe they can pass it, but let's not forget their majority is very slim. But let's say they pass it in a bipartisan way with that attached. Let's say that happens. So now it gets to the Senate. Do you think the Senate's going to send that to the president's desk?
No. And I don't think it has anything to do with the anti-corruption provision. I just think market structure is very complicated. And as the Senate people in the Financial Committee dig into it, I am not sure they will believe that this is a well-done bill. Like, again, I will point out to people the best predictor of a bill passing is that it has existed for multiple Congresses. I think they're going to take a couple of turns on this one before they can get it right. And it would not shock me if they start carving it into pieces because some of it's easier to address than other parts.
Right.
And so
definitions, level of decentralization. You could do the whole, like, you do that entire just like security safe harbor, token safe harbor and security commodity thing as its own little thing.
Correct. And you can do the exchanges shouldn't be custodians thing. Like there are smaller pieces you can take off that are non-controversial. Whereas getting everything through in an omnibus, I think, as they're experiencing right now, trying to pass the big, beautiful bill, the more things you put into something, the more objections you could also get.
Yeah.
And in a very fractured Congress with very narrow majorities, that is, sometimes it works, but when it doesn't work, the wheels tend to come off.
So what I'm hearing from you is your current view on the likelihood is without the anti-corruption amendment, it may pass the House, but it won't get cloture in the Senate, regardless of the substance of the bill, right? Because Republicans have 53 seats in the Senate, so you need at least 7 Democrats if every Republican votes. And it doesn't feel, and I agree with you on this. It doesn't feel to me like they can actually get cloture on market structure without addressing the corruption question. But if they if they send it without that, it fails in the Senate. If they send it with that, you separately think it's going to fail in the Senate anyway, basically.
Yeah, and I'm not even sure it gets past the House at this point because I think the previous Fit 21 vote, everybody knew it wasn't going to survive.
Yeah,
it's
and it was
easy to vote for a bill,
and it was late. It was in May of the election season, so it was like, oh, here's a bill we can all vote to be pro crypto on.
And I want to be clear. I do think many of the younger Democrats in the House are actually genuinely pro-crypto. I just think this is a complicated problem because it's very different to be saying we don't think there's any version of this bill that works, which is the Elizabeth Warren, it is never time to pass a crypto bill, versus actually we like the concept, but we do it this way and you're doing it. That's a different fight. It will still stall a bill, but that tends to, over time, lead to progress, which is what has happened with stablecoins.
Yeah, it has. It's been done multiple times. You had Maxine Waters worked on it, then Pat McHenry worked on it, and basically, and it really did improve over those multiple iterations, actually. Whereas we really just have Fit 21. Well, I guess you had DCCPA, which is not very good. You had that was Stabenow Boozman. Then you had Lummis Gillibrand, also okay. It's gone through some.
It's gotten through.
But it's a lot more complicated than the stables.
It's significantly more complicated, and with no insult intended to anybody here, the staff have spent less time on it, so they're less up to speed, mainly because, again, the opportunity to pass it just was not there. So, again, I will remind everybody, if somebody's an elected representative, crypto is not you've got, the Iran-Israel thing going on. You've got the budget deficit. You've got all sorts of
Big beautiful
priorities.
bill and yeah.
Crypto is not like number one in screaming fashion.
Well,
For all
and
of
not
these
to
people,
mention,
and that's not a criticism.
right? And not to mention, you've got the market regulators already acting here. You've got the banking regulators already acting. It's not like the Trump administration has not delivered to the crypto industry the reforms that it wanted. It has, just not, legislation is Congress. It's not the executive branch has done a lot, actually.
I would also say I think Congress has an interesting dichotomy they're trying to deal with. I testified earlier this year in an Oversight and Investigation Subcommittee hearing on what regulators had done under the Biden administration. So I think there may also be some hesitance to give them new powers, right? Maybe until they've sorted out what they're doing with some of their current powers.
That's right.
And again, this is why this is very complicated. Whereas stablecoins, like I would tell you, if the degree of difficulty range is 1 to 10, stablecoins were probably a 3 and market structure is like an 8.
Yeah. Before we wrap, Austin, do you think Genius will get signed into law this year?
I'm some version of it, because the House is going to maybe have a few small tweaks here and there that they can reconcile, but I am optimistic on stablecoins and pessimistic on market structure.
And you mean this year too? Yes.
I mean this summer specifically, but yeah, this year.
I think so too. And so either emanating from that or in general, what are you most excited about in the world of digital assets over the next 6 to 9 months in your mind?
Okay, so I'm an outlier in that I got into this space without really caring about Bitcoin deeply or meme coins or in some ways even DeFi because, again, I'm like a financial market structure nerd. And stable coins are one of the key unlocks to starting to move the U.S. financial system out of the 1980s, where I don't think people understand like how bad it is. We have a financial system that to trade like a single share of stock, like if you have the Robinhood app or something and you open that up and you just after this conversation go hit buy on a share of Circle, that goes through like 9 intermediaries in some cases. Like it's mind blowing how many people are involved in that and the complexity. It's like an actual Rube Goldberg machine, like, of like a monkey hits a switch that rolls an egg down like a ramp that hits a fry. Like it's incredible. Okay. And so I think this technology has the ability to genuinely transform the U.S. financial system to make it significantly more resilient, significantly more transparent, and significantly more accessible. But to do that, we need to be able to, put money on a blockchain. So the stablecoin bill is a key unlock that signals 2 things. 1, you can do that. And 2, specifically, it is okay for regulated entities to be dealing with public blockchains because Genius specifically says that. Like we don't know who 100% of people are, so it's all North Korea is like off the table. Now you have to start having real discussions about how do we manage risk.
Yeah, I do think that's right. I think, at Fidelity, when we were looking at blockchain application use cases in like 16, 17, 18, one of the key blockers was, we don't have dollars on chain, so we can't really do anything with this thing.
Right. Like, how do I pay for a sandwich if I don't have money?
Or
right?
We could do a structured product with Bitcoin and, oh, crap, dollars. We don't have those.
Yeah, no, you run into this thing where it's like, guys, to use a blockchain, we have to go back to the barter economy. Like, what are we doing here?
Yeah. No, I think it's a key unlock. I think it's also very powerful for the dollar, I think.
Yes.
I think if people don't want our dollar as much, not people, if sovereigns and international importer-exporters don't want to trade with our dollar or own our debt as much, this is a subversive American dollar dominance way of saying, well, you know what? You might not want to hold it in your sovereign wealth fund or your central bank, but I bet your people want it on their cell phone.
Yeah, and I would say if you're an American, so let's say you're an average middle-class American, and you're asking, well, why are stablecoins important? I'm going to give you an honest answer, which is to you personally, locally, in your day-to-day life, they are not. Your system works. Like, the bank just doesn't steal your money for no reason most of the time. I mean, they totally do in the United States, but it's rarer than people think, and often due to either mistakes or like very localized stuff. There's not a systemic problem with that. Your payment system works. I can go to the deli here in New York at 3 a.m. and tap my card and it works.
Yeah.
But like, now imagine you live in Venezuela or Nigeria or Myanmar or Iran right now. And imagine specifically you're on the outs with the government because maybe, I don't know, you like America.
Mm-hmm.
And what that means is your local currency has constant, severe problems with inflation. And if you keep it in the local system, they'll just steal it from you when they don't like you.
Yeah.
Stable coins are a way to export the US dollar and US rule of law globally to anybody who has the following two things: the internet and something of value to exchange for it. There is maybe, if you are like pro-immigration and pro-human rights, this is a way to export much of the value of that to the entire world, and nobody can really stop you without turning off the internet.
Yeah, not really.
Yeah, that's going to have some other economic problems. So, like, who are the losers of the Genius Act? Okay, the BRICS trying to repress their citizens in some cases, folks who are trying to enforce capital controls so they can expropriate their local people through inflation, corrupt systems that are themselves like the criminal that just constantly steal from the people they govern, anybody trying to do things like tell women they're not allowed to have money or jobs, like the Taliban in Afghanistan. Like, these people are all being fundamentally disempowered by our ability to put dollars on a blockchain and make them widely available. It may, in many ways, be the greatest expansion of human rights in the past 30 or 40 years.
My friend Austin Campbell from Zero Knowledge Consulting and New York University. Thank you so much for coming back on Galaxy Brains.
Thank you for having me.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Austin Campbell from NYU and Zero Knowledge Consulting, and our friend Beimnet Abebe from Galaxy Trading. As always, everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.